Happy Monday. Apologize for not getting the Friday live stream up right away. I literally was in weekend mode, shut everything down. It's really, really important to touch some grass, so to speak, and unwind. Get your eyes off the charts and get off the technological devices and all that kind of stuff and just get outside or do something else completely. It's good to have hobbies and stuff like that too. So, okay, yeah. So let's talk about today. Wow, what an open, eh? What an open. Anyone take any trades out of curiosity? There was a bunch of things I saw, but I don't know what everyone else was seeing. So if you took a trade, let me know what you took. I'm really curious. So let's start with NQ. Let's start with the analysis. I'm going to just hit the replay button and just go all the way back to the start here, right at open. And we can see what kind of price action we were looking at when we showed up. Because this morning I woke up and everything seemed okay. And then I stepped away, got dressed, in the morning, whatever. And then next thing I know, there's this huge spike. And I'm like, what in the world just happened? Like, we're talking almost 1,000 points. Insane. So immediately the first thing I do is I jump to Financial Juice. I love going to this site. It's the best. And sure enough, here is all the news. Of course, we all know now, everyone's been talking about it, but there was, the war communication and the news that comes out is just literally ripping the market in one way or the other. So Trump had basically said that they're going to delay or postpone any sort of those strikes, right here. And it's super interesting to see how price reacts to this type of news. But then what's really crazy is Iran is basically saying the opposite. And they're saying there is no conversations being had between the States and Iran. So I'm like, oh my God, these guys are crazy. We got like psychopaths running our world. It's nuts. I'm sure everyone in this world wants peace, except for people who are leading our countries. I don't know what's going on, but hey, politics not my thing. My thing's trading. My thing's technical analysis. I'm going to stay in my lane. So once again, we see the crazy spike. Immediately go to Financial Juice. I see what the reason is. I'm like, okay. So right out the gate, we have a pre-market pump. Now, last week I talked about how whenever you see price action make these crazy big moves in the pre-market, it usually means that the New York session is going to be a very tricky one. It's not, you're not going to have that expansion, right? Typically. Now, it's not to say you can't find a trade. I'm just saying it's going to be a little bit harder because depending on your rules and your criteria, you literally are just going to be on the sideline waiting. But once again, it just depends on what those rules are, right? For me, today when I saw all this, the first thing I thought was, okay, well, where are my key levels? So let's just quickly figure out what those levels look like. So on the 4-hour time frame, and we're just going to go from the 4-hour to the 50-minute to the 1 minute. We'll just kind of look at it from the higher time frame to the mid time frame to the low time frame. But right off the bat, we're sweeping LRLR up here. We are inside of a SIBI. So when we start seeing that, we got to think shorts, right? Because we short off of old swing highs and bearish FVGs. There's nothing new to that. So I'd marked off some liquidity here. Okay, and I'll just mark this off as a H4 FVG. And then I'll go to the 50-minute. So when we're on the 50-minute, here's 9:30. So if we're going to align the MTF with the higher time frame, we need the 50-minute here to move into some sort of a bearish POI. So what are the bearish POIs in question here, or that could come into play? So there's a high here, there's a high here, right? So I would just mark that off like this. We have a buy side there. I'm not going to mark this one up here just because we know price doesn't actually go up there. So FVG gets closed, and then we start getting this kind of chop, right? And then ultimately price finally ends up coming back above that 15-minute buy-side liquidity level. So now you have the higher time frame being bearish. You have the MTF being bearish. This is where you can start looking for setups. Now, I've talked in the past about, 3 different types of ways you'll see reversal patterns. One way, does anyone actually remember those 3? Just curious. If you don't want to say anything, that's fine. No stress. But there's 3 patterns I typically look for. Yeah, Unicorn Barbie nailed it because she's got unicorn in her name, so she knows. IFVG, yep, that's the second one. And the third one is the swing failure pattern. Now, sometimes you're going to get a combination. And this is when, if you're trying to figure out which one to use, then you could get yourself into some trouble, right? What do I mean by that? Well, let's just examine this 15-minute level for a second. So right here, we have a IFVG that forms right there. Okay, and I'll just mark it off as a bearish IFVG. Let's just increase the size so we can see it, right? So we have a bearish FVG. It is roughly 14, almost 15 points in size, so that's pretty good. And what ends up happening is we get price confirming the IFVG. So if we just look at it from a checklist perspective, the New York AM kill zone, yep, that's inside of that time for sure. Premium and discount price is well above the daily EQ, which is something that I use to gauge my bias, right? My trading bias. Now, we already looked at the H4 and kind of alluded to ERL, IRL, that type of thing. And we said that the H4 was bearish. When I'm trading IFVGs, I don't even really look to that stuff. I just look at the daily EQ. So this is going to be kind of a analysis, but I'm just going to kind of cover everything here in one because I saw a bunch of things. And I executed on nothing except for an IFVG short that happened later. And we'll talk about that in a sec. But higher time frame liquidity sweep. So the thing for me is I was waiting for a higher time frame level to get tagged. So I was waiting for this higher time frame level up here. This was actually an H1 level. So for me, in terms of rocking any sort of IFVG trades on a funded account, I needed to see this level get tagged no matter what. If I didn't see that level tagged, there's nothing there for me to do. So I did see the 15-minute though, and I was having some conversations about the IFVG, I think, in the chat, and I said, hey, you know what? I'm not going to take it just because I'm looking for that higher level to get, or that H1 level to get tagged. But if we look at this, here's the IFVG. Strong reaction and momentum. Yep, there's a strong reaction off of that level. Sure. Is there momentum? Sure, there's momentum confirming the IFVG, right? And what do I mean by that? It just means that the amount of candles it takes to confirm that move isn't like a choppy, consolidated move before it confirms the IFVG. We're talking like a straight V-shaped recovery. This is what we want to see. So that's strong momentum. Singular just defines that there's no FVGs or imbalances in the way of where price is going or where we want price to go. Okay, so if I just replay this back just slightly a bit more here, I have an I have an FVG indicator that will show me all FVGs that are there, no matter how big or small they are. And right here, you can see there's one right there, right? And there's nothing here. So what that means is this is all LR, and it's a singular setup. Singular just means that we're only playing off the one FVG that turns into the IFVG. That's what makes it singular. Now I'm stacking my I'm stacking the IFVG here because there's back-to-back FVGs in a row here. I play it safe. Usually when I take these kinds of trades, you'll see it in the next, like in the actual trade I take, you'll see it in a sec. But we get that setup. This is the singular setup. And then clear drawn liquidity. I mean, when you just look at this, I mean, the liquidity is pretty obvious, right? And then you also have the New York low of day down here too. So the drawn liquidity is super, super clear. Is there a higher time frame IRL in play? We can check and go to the 15-minute. Nothing there. We can go to the 1 hour. Nothing much there. If we go to the 4 hour, though, you see this FVG that we were talking about earlier. Well, that's in play, right? So that is technically the higher time frame. So I would check that off. And the other thing to look at is there SMT. Now, the last 2 points of this are not mandatory, not by any means. Okay, the last two are strictly just confluence for me. The first 6 things on my checklist are mandatory for me to take a funded trade. Obviously, there's some interpretation or some intuition or judgment that goes into understanding strong reactions and momentum. You could say, well, that's pretty general, right? But when you look at things like time, you start looking at things like premium and discount, like those are pretty concrete, lines in the sand. I say concrete, but it's just like very clear lines in the sand, right? These are our goalposts. You can't move them. But stuff like singular, strong reaction, those two require intuition once again, and just a sense of some sort of judgment. And the thing is with trading is, nothing in trading is ever going to be 100% mechanical. Okay, and if we look at even the IB trade Matt took today, it actually front run the entry, and I think it front run the exit. So you have to have that intuition to make those decisions, right? You can't just set and forget as a trader, even though we might want to do that, especially when we're learning. It's just easier. I'm just going to quickly go through the chat. I think there's some questions here. I just want to make sure I don't miss anything. Swing failure pattern. Well, we're going to talk about that in a sec. I'll show you exactly what that is. My indicator is the IFVG Pro Plus indicator by 2 degrees. If you go to my link tree, it's right here. If you want to sub to it, I really appreciate your support if you do sub to it. I don't sell anything. I just have a few affiliate links that I believe in. What is higher time frame IRL? Higher time frame IRL stands for internal range liquidity. Internal range liquidity is basically an FVG. That's all it is. So a higher time frame IRL is just something that I'm using on the higher time frame. So it could be H4, it could be H1, it could be 50-minute. Basically anything higher than the time frame I'm executing on, which is the 1 minute. Yeah, unfortunately, IFVG Pro Plus is not free. I used to have a 20% discount with 2 degrees, but they had canceled that. So I got to talk to those guys, maybe see if they can hook me up with something good so that I can hook everyone else up with something good. Sapchim says, when referring to new high of day, is it only during market open? So new high of day basically means if the market opens during Asia session, right, 6 p.m. Eastern time, if a new high of day is made during London session, then that's the new high of day. If the new high of day is created during the New York session, then it's the new high of day. Now, how do I determine the New York high of day and the New York low of day? I'm literally just using kill zones. It's similar to how we would use these types of kill zones with Asia session or London session, right? So how we have those overnight session highs and lows. The New York AM kill zone is no different. Basically, for me, the window is 9:30 to 11. So I'll mark the high and the low of the New York session high and the low. And these can often work as really good liquidity, like draws on liquidity plays, and even like used as a magnet. And I'm going to show you that in a sec. Kira, how we learn, bro? Well, showing up to the live stream is one way. Having communication inside the chat is another way. Talking with some amazing traders that are probably in here right now. I see a few that I know of, and I'm sure there's others that are really good, but I don't know if you're what you do because you don't share your charts, which is totally fine, of course, no stress. But there's loads of people in the community that are super well versed in trading. They've shown their success. So I mean, the goal with AshCap Discord and Unicorn University was basically we just want to surround ourselves with like-minded professionals, people that want to work and put the work in and get better. And yeah, we make mistakes, but if we can learn from those mistakes and support each other, that's what this whole thing's about, right? And I'm sure there's other communities that also do something like that as well and what they have to offer. But for me, AshCap and Unicorn University are like numero uno for me. Literally changed everything for me when I found Matt. So So we answer that question. TT says, so is the higher time frame IRL the same as a higher time frame PD array, like delivering from a gap? Yeah, basically. There's so much terminology, man. Like people get lost in stuff, and I understand, and it's not judgment. It's just there's so many ways to say things. It's crazy. Like, I don't like saying PD array because I think it just sounds like a mouthful. I liked how Matt talks about IRL and ERL. It's just so simple, so easy. There's no fluff to it, right? It is what it is. So looks like you got confused earlier when you read New York High of Day, read it as NY, as new. Okay, no worries. Yeah, that happens to me all the time, man. I always mix things up. So let's quickly get back to the chart. So we had the IFVG here. If I was to have taken it, my entry would have been like about here. Stop loss, the thing with the stop loss is that the tighter the stop loss, the better your risk to reward becomes, and the tighter your TP gets. If you like, I'll give you an example. Let's say I risked at I put my stop loss at the swing high, and I was looking for 1R. My 1R is way down here at 51 points. Okay, let's just see what happens. So it pings it right here. So it would have been successful in that regard. Okay, if I had a tighter TP, meaning that my stop loss is closer to the top of the IFVG. Let's say it was like right about. Let's use this candle. So about 35 points or so. That move that we looked at, right? Because we can see that there is a swing point here. That gets you now 1.5, right? But if you're looking for a 1R move, you would have hit that way earlier, right? While all this was probably chopping, right? Anyways, I digress. I didn't take this trade. Now, here's the thing. We talked about the 3 types of reversal patterns that we saw, or that we can see at a higher time frame POI. So one of them was the IFVG, which I just showed you here. The other one is the swing failure pattern, okay? Now you'll notice there's no unicorn here yet. We're going to get to that because it does form. So when we're looking at swing failure patterns, ideally with swing failure patterns, we're looking for like the sweep, right? Then we're looking for a move lower, and then we're looking for in this case, because it's a short, we're looking for a lower high to form, and then a break through the order block here, right? And then you would have a tap like this, and then a move lower. So this is ideally what you'd be looking for. So when we look at this, because the IFVG already formed first, this is how I look at things. If whatever forms first is what you go with. So in this situation, the IFVG formed first. So no matter what happens afterwards, to me, the IFVG is the play. So, because you can see here that there is a swing failure pattern right here, right? It does this, right here, lower high. But watch what happens if you were to have taken that trade setup. So your order block would have been right here. We mark it down. So here's your order block. You would have entered right about here. Okay, maybe your stop loss was at the just above the order block high, the lower high there, or maybe you had it higher. I think your RR would have been pretty shit if you did that. It's a big risk to take given the way the market has been. Of course, the market will do whatever it wants, whenever it wants, but you have to play to probabilities of what you've seen happen over and over and over again, not just like anomalies. But let's see what happens. So on NQ, if I had a stop loss here, well, that hits stop loss, right? Okay, so once again, go with what's going first. Like if you're going to analyze it in that way and you're looking for those 3 types of reversal patterns, whatever forms first, that's the one I would stick with. So for me, I didn't even consider the swing failure pattern. The IFVG plays out perfectly. Okay, so that's that setup. Let's close the checklist off for a sec and let's keep going. So now here's 11 o'clock. The New York high of day has confirmed. So we're going to mark that down now. And this is the trade I took today. And the reason I took it on eval and not funded was because one of my rules is I don't want to take trades on my fundeds after 11. I want to take it in between in between 9:30 and 11. And when we get outside of that, it's not technically A+ for me. So I'm going to be a little bit more cautious, okay? This is what evals are for. So if you win an eval, there's so many giveaways right now. Like even I won a giveaway. It was great. So I traded, I won a My Fund of Futures Rapid 50K account on Friday. And I was like, okay, I'll trade it today because there's a 30-day time limit on that thing, right? Whereas my Lucid evals, there's no time limit. So I can take all the time I want with those, which is great for people who are also learning. If I had access to a Lucid account back in the day, like a year or two ago, instead of Apex, I mean, that would have been so much more helpful to me versus what I had to do with Apex, because there's monthly renewal fees. Then you start rushing, and next thing you know, you blow your account, and then you're hitting the reset button and all that stuff, or you're just simply losing money. Been there, done that. Lucid's amazing for this. Okay, but anyways, we sweep London High. Okay, I'm gonna get rid of the 50-minute level now because it's not in play. Let's put the checklist back up, because I will show you two things that happen. So the first thing that happens is a liquidity sweep on the lower time frame. And do you prefer Lucid Pro or Flex? Honestly, man, like, I think I prefer Flex just because the cost of entry is like so cheap. It's like $65. I know on the back end, you got to wait, you don't get same day pay. And there's some other, discrepancies there, but I don't know, man. I just feel like in this world, the Flex is a great way for people to get in. I think when you're like later in your trading career and you're profitable and you got payouts coming, I think then starting to work on those types of accounts makes sense. But I think if you're on, you're just starting, you're just trying to get things figured out, or even if you like you got things figured out but you're just starting slow, start slow. Don't risk all your money on the most expensive types of evals. Get the cheapest shit. Get the cheapest stuff, and then prove to yourself that you can get funded with it, and then prove to yourself that you can get a payout with it. And then once you start getting those payouts, then you can start moving into those higher tiered evals, because they do cost a little bit more, but because you're making that money back with your payout, that money can get reinvested back into a different type of eval. So that's my answer to that. Okay, so here's the New York Hive Day sweep. And we're outside of the kill zone, so I'm going to uncheck this. We are above premium and discount. We are sweeping higher time frame liquidity. This is the New York Hive Day. What I'm looking for now is a strong reaction off this level, and then I want to see really good momentum confirming the IFVG. So when you're looking at this, the IFVG is way down here, right? Because we're stacking these two. So it's a big ask, right? If you're looking at it, but this is part of trading, is having a mechanical process, and then literally you got to have no fear. You literally have to have no fear. I mentioned this today in the Ash Cap. I used the wrestling analogy with a wrestler named Penta, who has a saying in his language, Cero Miedo, which means no fear. I absolutely love it. I'm a big wrestling fan, though. But I think it's so fitting when it comes to trading. You can't have any fear. If you see your setup, you execute. Don't worry about what Trump's doing, right? Yeah, that's what it means, Happy Whale. Okay, so we get the sweep. Let's keep seeing what happens next. So now my ICT SMT indicator is showing that there's SMT. So let's pull up the SMT. Now we also know that we're still moving off of that and rejecting off of the higher time frame 4-hour SIBI. I'm going to keep that checked off, higher time frame IRL. So when I'm looking at this setup, right now we haven't seen the strong reaction and momentum, okay? But everything else, like if that confirms, everything else checks off except for the time. This is why I moved it to eval, okay? If this had all been checked off before 11, like if this had happened before 11, I would have probably taken it on funded. I probably would have, just because, like I said, I'm going to execute mechanically. So let's keep going. So the other thing to think about, which I actually should talk about because it's happening right here, is when you're looking at your charts, don't do analysis on MNQ. My opinion is to do your analysis on NQ and execute on MNQ. So I'm doing all of my analysis here, waiting for NQ to sweep this level. But guess what? If I go back to MNQ. Now on the left I have NQ. On the right I have MNQ. I got this set up for us already. I just want to show you what happened. So at right about 11:11, oh, that's pretty funny. 11:11. That's a magical number. A very godly number from what I've been told. When you get a sweep on NQ, it's go time. But look at what happened on MNQ. MNQ didn't sweep. It actually missed it by $1. Okay, and I've highlighted here and I showed you the numbers here. Okay, so if I'm just using MNQ, I missed this whole setup because I'm thinking it never swept. Don't use MNQ, use NQ. Okay, so if I'm using NQ now, I got the sweep, price is moving lower, and what do we have? Well, we have a breaker block now starting to form. So I talked to you guys about 3 types of patterns that you'll see. IFVG, unicorn, swing failure pattern. Now for me, I didn't want to take a unicorn because the unicorn never confirmed. As you can see, there's no FVGs inside of the breaker block. So this is just technically a breaker block. So because the unicorn didn't confirm, I was like, I'm just going to wait for the IFVG. Now the other thing you'll notice is this FVG here also has a volume imbalance right here. So I'm going to just quickly draw a line out here to mark that off. Okay, so when I'm looking at the IFVG, which is technically this, I still want to make sure price closes below that volume gap because it's important. So let's just hit next and see what happens, right? Okay, so then we get something like this. So for me now, here's your entry. I personally used a stop loss just a little bit above the breaker block. I can't remember how many points my stop loss was. Let me just double check quickly. Just so I can be accurate with things. So it looks like I had mine at 24,669. So I had about a 53-point stop loss. I was targeting 1R. The thing with trading is you have no idea what's ever going to happen, except for the little blip that you might be looking for price, to do, right? Like I wanted price to move lower and wipe out the liquidity here, but I have no idea what's going to happen. So this was the entry I took. Here are all my criteria. To me, this was a beautiful trade. The strong reaction, well, yeah, clear, beautiful sweep, no closures above the New York high of day, perfect. Strong momentum, price immediately just ripping through the IFVG. That's what I want to see. I don't want to see consolidation and more candles forming. I could have even gone on the 2-minute for something like this, just so you know, but I just want to show you what happens on the 2-minute. 2-minute does something like this. You see how right here is where the FVG is? Then you get something like this. So TP would have been a bit lower if you use the 2-minute. I personally just used the 1-minute because I was gauging it off of that volume imbalance right here, which I marked out the line. Regardless, that single candle that confirms the IFVG also ripped through the volume imbalance. So that was like 2 birds in 1 stone. So there's the setup. And after that, you just let the trade play out how it's going to play out, right? Like there's nothing else you can do. And sure enough, there's the trade. Now, price went higher and pulled back into the IFVG. The thing with these IFVGs is you don't want price to be closing back above the IFVG. The whole point of the trade setup is momentum. IFVGs are momentum-based trade patterns. So that means like you should either have some sort of an instant reaction, which if you've seen some of my other trades, I hit TP in like a few minutes because there's no drawdown. It just literally melts. And that's why I market order, because you never know. Happy Will says, do you manage the trade on the 1-minute, like for example, where you should go break even and take TP, or do you manage on time frame you take it on? So because I'm just taking 1R and my data shows a high 70 to very, very low 80% win rate taking TP at 1R, I'm literally just setting 1R. And yeah, I'm examining or analyzing where the higher time frame draws on liquidity are, right? So if I'm taking the trade on the 1 minute, I'm going to look at the 15 minute or the 5 minute. So if I look here, like I know that there was a 50 minute level here on the sell side, and then we also have New York low of day here. But to me, when price hit this 50-minute level, the first thing I did was I immediately moved my stop loss to break even, because I don't know if price is going to reverse from there, right? We don't ever know. So you have to take precaution. For me, it's a mechanical process. So I already moved my stop loss to break even. My break even is usually going to be $1 away from my entry. That's what I do. But it was all good because TP had hit and all was well. The other thing with this trade was I set a limit sell order. In this case, it would have been a limit buy order because I'm shorting, but you get my point. I put a limit order here to take profit. In the past, I've been market ordering out, but sometimes what happens is you get slippage that goes for it, like goes in your way, and sometimes you get slippage that goes against you. So I'd rather be more accurate and just take the 1R, right? So like for me in this trade, I risked about $440. So a 1R move, $440, right? Now, you'll probably be saying to yourself, well, why didn't you just skim profits and take TP along the way, right? Like if the draw on liquidity was way down here, like, why didn't you wait for that? So the thing is, once again, you don't know what price is going to do. And looking at data in the past and looking at data from other people who've done so much extensive testing with IFVGs and the way I trade it, data has shown 2R hits and 3R hits significantly lower the win rate. A 2R usually hits 62% of the time, and a 3R is like 40%. So even though you might look at this and go, well, hey, this one actually ran super deep, right? Like, look at this. Perfectly ran here, right? Thing is, that's what happened today. Doesn't mean that's going to happen the next time, right? And I always have those percentages in my mind. And I've been burnt because I'm sure this has happened to some other people, but like you don't do it in this situation. So then you think in the next situation, well, I remember it happened on Monday. So now today I'm going to be a little more risky, but guess what happens? Remember, those percentages are not working exactly in your favor. And guess what? Price will reverse and not go 183 points. And given the way today has played out, to even think that price was going to go 183 points the other way, I mean, who could have predicted that? Nobody. The only thing I can do in terms of a prediction is determine where a reversal can take place, because I'm a reversal trader. So for me, I identified the reversal right here. We identified two different types of models to a certain extent, right? Now, this wasn't a unicorn, but it is a breaker block. Okay? So I take the 1R because I can risk a little bit more money. I know I have the high 70 to low 80% win rate in my favor if I trade based off of my checklist. And if it's on funded accounts, I don't want to be stuck in trades longer than I need to be. And I don't need to be greedy, because when you're copy trading base hits, these things add up really, really fast. Okay? And you really don't want to let the market decide for you. And I love that Matt today took that IB trade and he didn't let the market decide for him. He took action and took that profit off the table because it literally looked like it missed TP. So we'll talk about the IB in a sec. Does anyone have any questions about anything I've talked about so far? I just want to say thank you guys for showing up, by the way. I really appreciate your support and the interest in listening to some of the things I talk about. So I do appreciate that. Let me just go through my notes, make sure I haven't missed anything. Right. So the other thing I'll also say when I stack these IFVGs is the size of the IFVG. So ideally, you want to see something over 10 points roughly. This was about 38 points. For me, 40 points is about as high as I really would like to go, typically. But given how volatile today is, it makes sense that, the size of the IFVG is around those points and that it is fairly safe to take that setup. What you don't want to have is, IFVGs that are like, a few points, because when the market's moving as aggressively and volatile as it has been, you're going to get wiped out right away, unless your stop loss is at a swing point. But then it goes against the concept of the IFVG, because remember, the point of the IFVG is momentum. Price is ripping liquidity that was all formed here and then just melting. Are these classes recorded? 100%. This is recorded. So I will post this to my YouTube channel. It'll be unlisted. It'll only be available to people who are inside the AshCap Discord, public Discord. So if you're here, you'll have access to it. Or if someone shares the link with you. That's the only other way. Hey, no problem. Okay, so the other thing I want to talk about is when you're in a trade. Now, let's just say you are someone that likes to skim profits. Okay, so there's a few ways that you can do this. Of course, this comes with more risk and more stress because you have to be in a trade longer. You have to manage the trade longer. Let's just mark off these key levels. That's the first way. Mark off key levels that are potential draws on liquidity, right? So we have a swing point here, we have a swing point here, we have a swing point here. These are all 50-minute levels. We also have the daily EQ here. We know that that's a very key level too, right? It's a key support and resistance level. So that's one way. You could skim profits that way, right? Maybe at this point you're moving your stop loss to break even, and then your next TP is the low. If you're going to hold that long, still risky. Or maybe then here's your next TP. Let's go back to the 1 minute for a sec. Let's see what happens, because I think it does hit, if I'm not mistaken. There, it does hit right there. There. It does hit it, right? So this is another way you can take profit. Now, if you've seen how Matt has traded in the past, sometimes with unicorns, he'll show standard deviations. I want to show you another way of how you can use standard deviations with a different way. I don't think anyone's really talked about it in this community, so I'm going to talk about it. Does anybody use standard deviations to understand where price could go, like in terms of like a extension? I'm not sure if anyone operates that way or uses them, but I'm going to show you a different way. Let me just clean up this chart. So the way we're going to go about this is there's two ways. Matt has often talked about, and I learned this from him, he would use standard deviations, measuring the swing to the breaker block, and then we would have -1, -2 to -2.5 as the key target, and then -4 to -4.5 as our major extension, right? But often what happens is this. Overextension. Okay, so there's another way you can go about this. Okay, and it's not using the Fibonacci. So this is Fibonacci. Fib retracement tool. You have the 0. You have those levels marked off. Right. Nothing new there. I think for most of us. But here's the other way. There's something called a trend-based fib. Does anyone know what that is? Anyone heard about that? Trend-based fib. Some of this stuff might not be new to you, which is cool. But a trend-based fib is different than a Fibonacci retracement tool. Okay, what is the differences? So let's just quickly go here. I already set this up. So a fib retracement identifies potential support and resistance levels during a pullback. Now we were showing it more so in the sense of the standard deviation, right? We were extending the targets, right? Like how we were using like -2 to -2.5. But as we know with Fibonacci, there's golden ratios and things like that that also are important. When it comes to the trend-based fib, okay, we're not going to just use 2 points to create the extension or the retracement. When we're using a trend-based fib, you're going to use 3 points to predict, and it's literally only there to project future price action, meaning where could price go to, right? Where could it either extend to, or where could it retrace to, whichever direction you're going, right? How do you do this? Super, super easy. Okay, take some practice. I strongly urge you to do this because I often do it, and then in hindsight I go, man, why didn't I just keep that position open, right? But that's our greed talking. That's not our logic talking. The way to do this is we're going to go to, I'll show you guys from the left. So you're going to click on this fib retracement arrow here. It's going to open up all your tools right here, trend-based fib extension. Okay, so I already have it started, so I'm going to click it. Now what you're doing with the trend-based fib is, in this situation, because we have a breaker block, I find 3-point touches with a breaker block to be the best. I find them super accurate. So you're going to click the swing high. I'm just going to load this up. Actually, hold on a second. Let me just do this so you guys can see a little bit better. Okay, so we have the swing high here. We have the breaker block low, and then we have this Quasimodo level on the left here. So all I'm going to do is click the swing high. I'm going to go down to the base of the breaker block as my second click, and then my third click is going to click on where the liquidity sweep was. Okay, right here. Now what that's going to do is it's going to extend Fibonacci levels that I have set up for myself. What levels am I using? I'm using 1, I'm using 1.618, I'm using 2.618, I'm using 4.236, and I'm using 6.86. So pretty common back-end percentage levels, right? Like 236 or 618 or 86, right? Commonly we would see 0.236 or 0.618 or 0.786, something like that, right? But what this does now is it's going to project where price is going. And I just want to show you some stuff. So first off, let's just move this over like this, just so you can see how the levels work. Just make this to the right. Okay, so the labels are to the right, and you know the other thing I'll do is I'll just make them big. Okay, so here's our 1 fib. Here's our 1.61 fib. Look at the reaction off the 1.618 fib. Okay, perfect. So that's an extension level, right? Let's look at the next one. 2.618, price just smokes right through it. That's cool. Here's 4.236. Sure, it closed below it, but look at the reaction it had to the underside of it. Pretty good response. And then in terms of the final level, and I'm just going to make this go to the left now just so you can see it. So here's 6.86. Beautiful response off the 6.86 level. Okay, so if you're trying to use the trend-based fib to align your TPs, this is another way to go about it, right? It's another way you can do it. So like if I had entered here, 2.618 would be my first TP probably. That would be, just a little under the 1R, so it would have been negative RR, but then the second TP would have been down here, and that's 2R. Or you just bypass this altogether. It's up to you. You have to figure out what works for you. Like for me, what works for me is 1R. But I just wanted to show you this because I find this to be quite accurate. And then here's your final TP, and that's 4R. And that's a 215-point move. Okay, just think about that. That is a home run of a move. And then if we're looking at those levels that we had marked off earlier, those 15-minute draws on liquidity, we had that level here. We had that level here. We had the New York low, and then we also have the daily EQ. So you can also use that in combination with the trend-based fib. Check it out on your own time. See how the trend-based fib works for you. See how it feels. If you go back through charts, where you can identify, breaker blocks. We can do like a quick test on this, right? So there's a breaker block right here. So we can go to the low, to the high. Oops, wrong button. Here we go. So if I go low, you can just stretch it from here, right? We can see here's the 1.618. Nice reaction off of that. Does it go lower? No, it goes higher, right? So that's, like I said, you just run through some tests for yourself just to get familiar with it. But you'll start noticing the reaction that you're seeing, right? Here's 2.618. Perfectly aligns with that breaker block right here. 2.618. Pretty close. Right? And then, of course, we have what we just showed right now, right? So, with that being said, that's the trend-based fib. We talked about the NQ setup. We talked about the potential unicorn that formed, but it wasn't a unicorn. It was a breaker block. I used the IFVG in this situation. Got the 1R. That trade lasted 16 minutes. So $430 in 16 minutes of actual trade time. Not bad, for a day's work. Like, I mean, sometimes we gotta humble ourselves, especially when the greed conversation is happening in our head. Like, I should have held for more. I could have got 4R, or should have skimmed profits. Like, as a hindsight trader, you're gonna hear a lot of that in your head. Don't be a hindsight trader. Understand the risk. Understand when enough is enough. The goal is green days. The goal isn't being perfect. Just get your green day, whatever that number is. For me, my goal usually is to get $300 to $600 a day. That's one trade. If I can get $300 to $600 in one day, I'm on my way. And I find when I shifted my thinking to that perspective, that's when all the greed conversations in my head went away. They were silenced. They're muted. Am I human, and do I experience FOMO just like you guys? 100%. But having the mechanical process, right? Having the checklist, having the mechanical trade model to take the profit when it's there. And when I look back and I go, oh, hey, I made $430 like in 60 minutes. That's more than what people make. And remember, if it's copy traded, it's not just $430, right? But like, that's more than what most people, if not a lot of people, make in a day, right? Like, even the day job I currently work, I'm not making that kind of money in 16 minutes. Insane. So put that in perspective. Think about it when you're trading and the greed is talking to you. Just think about the things I'm talking about to try to help you, and then figure out a way to implement that system into your own trading model, right? For me, like I said, checklist was number one. The second big thing is putting a plan together on Notion, for example. That's what I've done. I use Notion. I have my checklist there. My plan is all there. My TP plan is there. My stop loss plan is, like, I have it all there, because just like any other business, you have to have a business plan. So to me, that's part of that business plan. Hope that resonates with you and makes sense. So we did the analysis. We had the news spike. We talked about the few positions, or the few reversal types. We did the trend-based fib. We talked about the IFVG short. We talked about the sweeps, NQ versus MNQ. The low of day as the draw on liquidity. What else do we have here? We talked about how I'm using limit orders to take my profit now, because I don't want the slippage to mess me up. And let's talk about the IB now. So let's talk about IB, because there was an IB setup. Now, I don't trade IB, okay? I don't trade IBs. And the reason I don't trade IBs is because I trade IFVGs. So if something's working, I don't want to mess with what's working. Okay, looks like people can't hear me, so I'm just going to... Okay, test. Can you hear me now? Test. Can you hear me now? Someone can just let me know. That would be appreciated. Hopefully you can hear me. Okay, perfect. There we go. Nice. Thanks for confirming. Hopefully Unicorn Barbie and Alice can also hear. See him typing. All right. Well, other people can hear, so it might not be something on my end. It might be something on your end. So, and given just how far we are in the stream already, I'm going to just continue. This is recorded, so you'll be able to kind of go back and check it out anyways. I know you can't hear me, but that's okay. So let me just go back to the IB stuff. Thanks, Bobby. Appreciate you confirming as well. Let's go. Okay, so IB. Yeah, no problem, Steve. I'll it's just in the in my channel, but I'll share where it's gonna be. So don't stress about it. Let's see. Okay, so here's NQ, and remember, when it comes to this setup with the IB, I'm not an expert on this, so I'm not gonna act like I'm an expert, but my interpretation of this model is you wait for the 9:30, 10:30 window to close, figure out what side was formed first. So in this case, the low was formed first, so we want to go long. Here's 10:30 right around here, so the highs is formed second, so that's our target. We would want price to hit the EQ of that range and then go to TP. Now, here's the first front run. So you get a front run of the entry here. And this is what I was saying with IBs, and I mean, any model you trade, you need to have some sort of a trader intuition. Okay, you can't just rely 100% mechanically speaking. And a lot of times what happens is when we backtest, the best or the easiest way to backtest is when you have a very, very concrete mechanical process, right? 1, 2, 3, 4, 5. You know, there's no gray area. Everything is black and white. The reality is it's not black and white. The reality is there is a gray area, and that requires your intuition. That requires your, trader IQ. And we often talk about the trading IQ. You got to know when you need to enter manually, or enter in a way, or even exit in a way that's not specifically to the plan, right? Exactly like how the plan is. Because if you were to have, back-tested this setup, you would have said, well, price front run the entry and then tag the TP. Therefore, this is a no trade, right? So, but when we look at what Matt did today, Matt basically entered right around here and took TP up here. Now, let's just check out MNQ for a second, because we already talked about how MNQ didn't sweep, right? So if we get the IB formed again here, and let me just delete everything off the screen. So not only was the entry front run, but the exit would have had to have been front run too, because like we said earlier, it missed by $1, right? So if you're waiting for that limit order to get hit, it doesn't hit. And then look at what happens next. You would have, if you had a set and forget on this trade, this would have been a very ugly thing to have come back to, because you had TP right here. I mean, even though it didn't hit it, you were right there. And that's a terrible feeling. And I'm seeing a lot of traders trade other models, and they don't take the TP even when it's like $1 away, just in case. Just be safe, right? And then it completely reverses, and they're thinking, oh, well, it's just a pullback, right? It'll find support around here, right? Like, oh, it'll find support around here, and it'll bounce back to TP. And then sure enough, it does not do that. It does the opposite. And this is what I'm saying with the market, is you never know what is going to happen. This is why you have to have more than just a mechanical plan at your hands. You got to also be like aware of when the plan is not actually going to work out for you. And you have to have that intuition. I learned this from Matt in a way, because, I mean, and he's just showcased it today, I think, by taking this trade and entering early and exiting early, not exactly at those key defined levels. So I just wanted to bring that up. I thought it was really interesting, and I thought it was a good lesson about intuition and how important it is. How do you get trading intuition? You only get trading intuition by showing up to live price action. You can backtest as many months years as you want. But the reality is when you're facing live price action, you have to like understand what it feels like to be front run like this. You have to understand what it feels like to get front run here and not take your TP. Those are mistakes, right? Those are when you look in your journal and you journal like what happened, those are things where you can reflect on. So that's where you build your intuition, is trading the live price action or studying the live price action. Maybe you're paper trading it, that's fine, but you're still showing up to live price action, and then you're journaling about what happened. Good, bad, and ugly. Because there's always good, bad, and ugly to everything. Okay? So the comparison I'll make is similar to like a boxer or an MMA fighter, and I think I used this analogy last week, but a boxer can only get better by having more fights. And often you'll see with boxers that like let's take a guy like Mike Tyson, for example. Mike Tyson, obviously, goated. Knockout power was crazy. He was my favorite boxer growing up. I'd never seen, anything like it. He was terrifying, blah, 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 blah. But the reality was, like, he had only been fighting and knocking people out in the first couple rounds. No, he had never been tested beyond that. So his in-ring experience starts to get tested as he goes into later rounds against other boxers. And you can start to see that he's learning. Even though he's the champ, he's still learning, and he's not as invincible as we thought he was when we start seeing him go to these later rounds. But that's in-ring experience, right? I relate that to trading because you need to show up to that live price action. A boxer only has 12 rounds to fight. MMA fighter has usually 3 to 5 rounds to fight. And those are like 5-minute rounds, but boxing, it's like 3-minute rounds, right? So do the math on that. Like, it's barely any time really in the grand scheme of things. Of course, when you're in the heat of the moment, those minutes feel like way longer than they probably are. But my point is that for us day traders, and we're trading the New York session, it's 9:30 to 11. You have an hour and a half. Anything outside of that's typically outside of the kill zone. And when price is moving outside of the kill zone, your probabilities start to get lower. It doesn't mean a trade can't work, right? I didn't say it can't work. I just said your probabilities for success are lowered. So if I know I can get a high 70 to low 80% win rate trading 1R IFVG setups based off my checklist and how I trade, why would I risk trading outside of that window? That is giving me the highest probability. I'll give you another reference. Think of when we see people, or even myself, if we were doing like one shot, one kill with evals, right? Day Trading Realtor had put together that amazing website. I have a link to it here. You can get 20% off for life. It's just a one-time fee. But that data calculator gives you the pad size based off of historical data, and it gives it for you, and it gives you the highest probability pad size to use. Once again, the key words, highest probability. Once you start understanding trading is about putting yourself in the highest of probabilities, then you start to understand how to be patient when you start seeing lower probability things happen. And even if it works out, you understand that it's lower probability because it's not going to always happen, right? So if something's going to happen 7 or 8 times out of 10, if that same type of setup is in a lower probability situation where it happens, maybe 5 or 6 times out of 10, it's going to fail 4 or 5 times. And it could happen in a row. So some food for thought with probabilities, with, the way you look at the market. I can't exactly tell you how to do things in the way of pushing the button to buy or sell, right? Like I can show you techniques, I can show you tips, I can talk to you about mindset, but ultimately it's going to come down to you showing up to the live market and experiencing the emotions, experiencing the feelings that you get when price is moving up and down violently or just chopping around, right? That experience is only going to come when you show up. So For me personally, I met Matt probably, geez, it feels like late 2022, maybe early 2023. And, you know, I'll be honest, like I literally was on the charts nonstop from that day, learning from Matt, showing up to every live stream. I like devoured his YouTube content over and over and over and over and over again. Like if I had to take my daughter to a karate class and I'm sitting in the parking lot, guess what I'm doing in the parking lot? I'm listening to Matt's live stream. So like the more you expose yourself to content that is aligned with how you trade, faster you're going to start growing, right? And that's when your trading IQ starts to increase. And then as you show up to the market more frequently, this is when your trading personality starts to develop. And I often talk about finding a balance between your trading IQ and your trading personality. And usually when they kind of connect and you find some sort of harmony there, and that's in the way of like a model or an edge or whatnot, that's when most people are starting to see success. And then at that point, you have to ask yourself, because there's always going to be a new shiny object that's going to show up. It's going to be an indicator. It's going to be some, you know, new ICT type concept model, right? Like we heard about propulsion block. Was it propulsion blocks or some other content came out last year from ICT, and a lot of people jumped on that. You know, even, I mean, I'm not trying to knock this, but like even IBs have come up. I didn't even know what the hell that was until Matt started talking about it and saying, hey, there's a guy named Mr. Zink that's doing this and he's successful doing it. He's very successful doing it. And he uses Edgeful and all the data, and he spent a long, long time figuring it all out. That makes sense to me, right? That makes sense to me. But once again, if I'm devoting myself because I feel great about what I'm trading, like in this case, it's IFVGs, and I'm successful trading IFVGs, and now IBs show up, do you think it's smart for me to change what's working? It's not. It's not. It's not wise at all. Your goal is to get the payout, right? Your goal isn't to trade the newest shiny object. Your goal is to get the payout. So if you find a way to get there, double down on it and then block everything out, in my opinion. Block it all out. Sometimes you're going to have to pivot and adjust. I understand that. And like I'll give an example of the IB with Matt, which what I've noticed is like, you know, obviously with the unicorns, Matt isn't seeing the unicorns that he wants to trade, right? For whatever reason. The IB is a great like fallback plan in a way. And I noticed today he took that trade because given the way the market was, it was like there's no way he's taking a unicorn setup like this, given the way the days played out. I've never seen him try to take a unicorn model when there's crazy news causing problems. But he took it on as an IB setup. And maybe I'm wrong, but that's what my hunch is telling me. And is there anything wrong with that? Of course not. There's no judgment here. But once again, for the rest of us, you know, like none of us are running our own Discords. None of us have courses. We are trading as day traders to get payouts. So like Bobby just said, right? If something works, don't fix it. You don't need to fix something that's not broken. And if you're getting funded with the way you're trading, double down on that because it's working. If you get a payout with the way you're trading, double down on that because it's showing you that you're successful, and then block everything else out. Honestly, block it all out. Block me out. If I'm a distraction to you, block me out. I won't take offense. I just want to make sure you stay successful. Does anyone have any questions about anything I've talked about today, or is there anything else you'd like for me to talk about? Feel free to let me know in the chat. We've been going for about an hour, so we're going to end the session here unless anyone has any other questions. I'll keep it open for you guys for about 15-30 seconds. No problem, T-Teaser. Thanks, Bobby. Appreciate everyone being here today, honestly. We had a pretty good turnout. Recordings path, yeah, no problem, no problem. You know what I'll do is let me just hop on the... So here it is. This is the link. Just click that and then you'll have access to all the recordings of the live streams that I've previously done. And then the one that we were doing right now will also get added there. I'll probably do it a little later today. And yeah, we'll get it going. So, all right. Well, I appreciate everybody's time today. And I hope you're having a good one. Hope your day's green. If not green, I hope you're break even, didn't lose any money. And yeah, we're going to be back on, well, I'll be back on Friday. Okay, thanks, Jackbit. We'll be back on Friday, 1 p.m. Eastern time. Let's see what the markets give us. Don't force anything. It feels like we have continuation of last week's, craziness. But as long as this war keeps happening, it seems like we're gonna have to really stick to our guns. We're gonna have to really stick to our convictions and the rules to our systems to keep us safe. So on that note, have a good day. Enjoy the rest of the week. I'll be back on Friday. God bless. Peace out.